Hello and welcome back to Chapter 7 Notes. And so now we're going to continue on with our Chapter 7 by talking about decisions involving joint costs. Okay, so here we're going to talk about, first we're going to talk about how to allocate out joint costs, what joint costs are, how to allocate them, why we need to allocate them, and then some decision-making aspects involving joint costs. Okay, so we say over here in terms of defining joint costs, we say that some companies make a number of end products, so final goods, from a single raw material input. Those final goods are known as joint products. So you have a joint product, so you have, for example, maybe you have cocoa beans, and then what you do is you have the beans over here, and then that goes into cocoa drink mix, so I'll just say drink mix, okay, or maybe it goes into butter, or maybe it goes into powder, okay. The cost of buying these beans is a joint cost because it will be allocated out. It's shared by these different end final goods. And what you have to do is take this cost, which is shared by these end final goods, and allocate the cost of buying these beans to each of the end final goods that we make. Okay? So those joint costs are the cost of the common input. So, for example, the beans. Or we could even say lamb. If we just buy some lamb, we actually have to do is we have lamb cuts, tripe, hides, bones, and fat, or we buy some raw milk. And so what we do with that milk is we move that into cream or skim. Okay? However we want to do it, but the cost of buying this milk needs to be allocated to these end final goods over here. Okay? So the term joint cost is used because those costs are incurred up to the split-off point. So when we talk about the split-off point, that's the point in the manufacturing process, whatever that is, okay, at which we can recognize these two end products as two distinct goods. They're separate from each other, and they're also separate from the joint cost as well, okay. Separable costs, we can say, would be all costs after the split-off point. Maybe we need to refine cream into heavy cream and light cream, for example. Okay, so those would be any additional costs that we incur to further process cream into heavy cream or light cream. Those would be separable costs. Okay, so we say over here it's profitable to continue processing a joint product after the split-off point. So we have our milk, and then from there, we turn that into cream, and we turn that into skim, okay? That would be the split-off point, the point at which we can recognize these two products as distinct products. And then do we want to further process cream into light cream and heavy cream, for example? It would be profitable to continue to process that joint product if the incremental revenue from further processing cream into light cream or heavy cream exceeds the incremental processing cost. But what we're trying to say over here is that the joint costs that were incurred up to the split-off point are irrelevant because they're sunk. Okay? So these initial costs that we actually have to buy the milk and then allocate it out to cream are irrelevant for whether we want to further process cream into light cream or heavy cream or just has it as cream. Okay? So that's what I'm saying over here. The joint costs incurred up to the split-off point are always allocated to the joint products, as we just talked about. Extreme caution should be exercised in allocating these joint costs. They are not relevant in decisions about whether or not we should further process these joint products, okay, because they're sunk. Okay. Now, first thing we're going to talk about now is how to go ahead and allocate these joint costs out to these end products. Okay, and we have to do that for financial reporting purposes. Okay, so you look over here. We have our joint costs, maybe the cost of buying some wood. We have our split-off point where we can turn it into grade B or grade A lumber, and then what we have is our further processing costs over here. Where do we want to process grade B into grade B treated with preserves or just treated as grade B? These initial costs over here are not relevant to this decision because regardless of whether we process grade B into grade B with preservatives or sell it just as grade B. We've still incurred these costs to buy the initial raw materials, so the cost of the initial raw materials doesn't matter because we incurred them regardless of what we do over here. Okay, so let's talk now about how to actually go through and allocate out those joint costs. And what I say over here is for financial reporting purposes, I actually have to do that. So they will show up in cost of goods sold. They will show up in inventory. Okay, let me see if this one. Having some issues here with my. Hold on one second. I'm just going to close out of this very quickly, and then come back into the presenter and see. There we go. Okay, now it's better. Sorry about that. So this is kind of like what I was talking about already, that the initial joint costs just don't matter because they're going to show up. It's a cost we incurred regardless of whether or not we further process it. Okay, so you look over here, and we say our joint costs will be so. Relative sales value method is one way to allocate the joint cost. The amount of the joint cost allocated to products depends upon the relative sales value. Okay, so again, sorry, I'm having a few issues with this one. I'm just going to go ahead and try to, let me see, I can't. Okay, so seems to be a little bit better there. So now I'm going to continue. So I have my joint cost allocated to product A. What I do is I take my sales value of A, product A, divided by my sales value of product A plus B. And I multiply that times the joint cost. And then that's how much will be allocated. And then with B, I take if I have two product sales, product A and product B, I take my sales value of B divided by my sales value A plus B times the joint cost. Okay, so I'm basically going to take a proportion based upon the sales value, and I will use that to then allocate out those joint costs. So if we look at our example over here, our American Produce Company purchased a truckload of cantaloupe that weighed 5,000 pounds for $1,000. American Produce separated the cantaloupe into two grades, superior grade and economy grade. The superior grade cantaloupe had a total weight of 4,000 pounds, which sells for 30 cents a pound. Okay. There we go. That seems to be a little bit better. Sorry, I'm moving around a lot here. Okay, the economy grade cantaloupe totaled 1,000 pounds, and that sells for 10 cents a pound. Allocate the initial $1,000 cost of the truckload to the superior and economy grade cantaloupe using the relative sales value method. So I have to come over here and I have to calculate the sales value of my superior and the sales value of my economy. Okay, those are the first two things I have to do. So I come over here with my so I have 4,000 pounds at 30 cents a pound, which means the sales value is $1,200. My economy, I have 1,000 pounds, 10 cents a pound, which gives me $100, so my total sales value is $1,300, right? So then what I do is how much of this $1,000, what I want to figure out is how much of this $1,000 is going to be allocated to superior, and how much of that $1,000 cost, joint cost, will be allocated to economy. And I'm doing based upon the relative sales value. So I come over here, follow my formula, sales value of A divided by the total sales value. So in this case, it's 1,200 divided by 1,300 times 1,000, and that's how much goes to superior. We look over here and we look at economy. This one, we see our 100 divided by our 1,300 times our 1,000, and then that's how much would go to economy. Okay? So I'm just taking a proportion and multiplying it times the joint cost, and then that would be how much cost each of these two products gets. And I have to do this for financial reporting purposes. Okay? When I look over here, the other way that I can do it is my physical quantity way. Another way to allocate is based upon the physical quantity of output. So in that case, it depends upon the physical physical quantity. So it's the same idea where I just take the physical quantity of A divided by the total physical quantity times the joint cost. Okay, so if I look over here, I have a joint cost of $620 using physical quantity. Okay, so if I have 500 feet of grade A and 500 feet of grade B, so that means I have a total of 1,000 feet. So that means that half 500 divided by 1,000 times 620, or 310, will go to product A, and then 310 will go to product B. Okay, so that's another way to do it. All right. If I do it in terms of the sales value, I get a slightly different answer. So I can come over here. I can take my 500 feet that sells for $1 a foot, gives me $500. Or I can take my 500 feet of grade B, sells for 50 cents a foot, gives me $250. So I take my 500 divided by my 750 times 620. That's a 500 up here. 413 of the 620 goes to product A, and then I take my $250 divided by the 750 times the 620. 206 goes to product B. Okay, and that would be based upon the relative sales value method. In either which way, the mechanics of the calculations are pretty much the same. You just take the proportion times the joint cost. Now, in terms of additional processing decisions and joint costs, we say over here is that sometimes a manager needs to decide whether to further process a product or sell it as is. In that case, joint costs don't matter because they're sunk. So you look over here at our sawmill, they buy logs and then run them through a saw that produces unfinished lumber and scrap. For example, sawdust, chips, and bark. The unfinished lumber can be sold as is or further processed into finished lumber. The scrap can be sold as is to garden supply or processed further into Presto logs, which are those fire logs that you can buy at the grocery store or the hardware store, wherever, rather than making a fire with getting the sticks from the backyard and your own firewood. You can use those Presto logs. I don't personally think they work as well. They don't burn as hot, but they are much easier. Now you look over here, the sales value, the split off point. Here's our incremental. This is our, if we were to just not process it, basically sell it as is, we could sell the lumber as 140, scraps as 5. If we further process it, we can sell the lumber as 270. So this is saying unfinished lumber can be sold as is for 140 or further processed and sold for 270. Scrap sold as is or further processed sold for 20. This is the joint cost. It's based upon the weight, so physical quantity, but that doesn't matter. Those are sunk costs. Cost of further processing does. And so what we want to do is, should we further process lumber or sell it as is? Should we further process scraps or sell scraps as they are? So we can go ahead and look at our analysis right over here. And we can say the sales value after the split off, 270, 20 for scraps, 140 for lumber at the split off point, $5. So this is selling it as is. This is further processing it. Okay. And then if I look at my incremental revenue, I'm just waiting for that to catch up. Sometimes this projector is a little bit finicky. Okay. All right. This doesn't seem to want to be cooperating, so I'm just going to write it out. So I take my 270 minus my 140. That will give me 130 over here. I take the 20 minus 5, gives me 15. The cost of further processing is 50 here, and it's 4. Those are from the prior page. So the profit of further processing is 80 and 11. In either case, we should further process the scraps and further process the lumber. Okay? So let me see if I can't get this video working a little bit better. Let me exit out and come back in. You just need to see it quickly, and then I think you'll be okay. There we go. All right. So you can see 270, 140 incremental revenue, 20 and 5 incremental revenue. Cost from further processing, which is given to me on the prior page. Cost from further processing. In either case, you get a profit from further processing. So you should further process both. What we don't have in this analysis are those joint costs, because those would be sunk. Regardless of whether or not we further process or sell it at the split off point, we incur those costs, so they don't matter. Thank you.